Alright, I got 10 videos to make, man, today. Just got back from the cruise. Had a really fun weekend. And now we gotta go back to work, man. So, we're gonna be starting with this episode of the Playbook, which is order blocks and order blocks and order blocks. Now, I don't know if I want to do a vlog of my trip, because honestly there's nothing much. Might make a short video, but we'll see, man, when the time comes. I got like 2 more videos to record after this, so without further ado, let's get into the order blocks. So firstly, what is an order block? What is it? What is it, man? It is the last bullish or bearish candles before a big move that causes a liquidity sweep and a break of structure. Alrighty. Now it also acts as a footprint of money, which is what we call institutional orders, basically where the fake banks and the fake smart money place their orders at. Alright, okay, so it's the big move that causes a liquidity sweep and a break of structure. I will give you more examples later, man. Now, why it matters is because price will often return to these areas and offer a higher probability setup, and these areas represent a lot of orders were filled, and it's a good spot to look for an entry or a confluence that is in your favor, or a confirmation. Yeah, that's why it's useful, man. That's why it matters. That's why you gotta know it. Now, I'm gonna give you a visual walkthrough right now. Where's that puff shit, man? Puff shit, alright. Alright, so you can see this was the big move down. This was where we swept liquidity. Alright, the last up move or down move, this is a up version that caused the liquidity sweep and also caused a break of structure, which was right here. This is the most recent low. We closed below the low, we got a break of structure. So this is our order block. Alright, I'm gonna be more specific with this later on, because now we only have one time frame, but we'll be more specific later on, so don't worry about that. It won't be this huge or whatever, man. So we got a break of structure, we got a liquidity sweep. Price tends to retrace to this area, which is your order block, and for it to be a valid, what do we call it, man? I mean, it works best when it's combined with other confirmations like fair value gap liquidity, break of structure, your daily buyers or whatever. And also, if you want to trade off order blocks, please wait for a rejection. Like if order block close up here, you're not gonna enter, man. Wait for some sort of rejection that tells you price wants to go lower, then you enter. Alright, I'm gonna give you the up example too. Where's that puff shit, man? Puff shit. Boom. Alright, this kind of sucks. Anyways, this is a bearish order block because we're going down. So I'm gonna give you the bullish order block. which is just the opposite. Sweep liquidity, break structure, retrace to order block, and boom. Alright. We swept liquidity on this leg right here. We got a break of structure right here. So this is your order block. From this high to this low, the last candles that swept liquidity, alright, the last down move is your order block. We got a break of structure, price retrace to this order block. Got a rejection, and what do? We long this shit, bro. Yes, sir. I'm just kidding, don't long anything, you don't know nothing, bro. I have to delete this manually because otherwise my text will be gone too. Alright. If you need more time, go back, take a screenshot, take your time, pause the video, and just soak all the information in. This is a pretty short video. I didn't expect that. Alright, anyways. Now, I'm gonna give you some extra notes to emphasize. We'll know that it's a liquidity sweep because price broke structure after the sweep, which is always our first sign, a break of structure. Next, don't use order block alone. Wait for rejection or structure break at the order block, a break of structure at the order block. Pair this with other confluences like fair value gap, inverse fair value gap. What else have you learned, man? Equilibrium? Yeah, bro. Use all the shit that I've taught you, bro. Alright? Alright. Now, I'm gonna give you an example. I literally had to find this out beforehand, just so I was ready, man. Alright. We have a low right here. We have multiple low resistance liquidity right here, the last one being over here. We've talked about liquidity before, we've talked about low resistance before, I believe, but it's okay, we have a lot of liquidity right here. I believe there's an hourly yep, there was an hourly high. Alright, step 1. We swept liquidity with this candle right here. Alright, what am I doing? Zooming into the 1 minute. Now, the leg that swept liquidity, right here. These 3 black candles, those are down candles. Those are the last down moves that swept liquidity. But is this a valid order block yet? Just because we had these 3 candles? No. Delete that shit. First, look for a break of structure. We got one right here. This was the highest, the most recent high. We closed above the most recent high. So now, this is a valid order block. The down candles that swept liquidity is your order block. We also get into breakout block maybe in the next episode or something, but now we stick with order blocks, man. Alright, we got another block, these 3 candles. Now, price retraced into this order block. Right here, we got a huge ass rejection, bro. I'm longing this shit. Stops at the order block low. Boom. 2.22, just like that. Clockwork. Shut the hell up. Don't take this trade, bro. This isn't enough for you yet. Just don't take it yet. Shut the hell up, bro. Anyways, you get the gist. This is your order block. Like, even right here, bro. Hold up. Swept this high. Boom. Break of structure. Down, up. Honestly, this is a huge order block, bro. This whole shit is your order block. But no, there's two ways you can do this. It depends on you. You can either use the candle that swept liquidity, which is right here. We break structure right here. We retrace into this order block right here, and it got a rejection. So you can either use the last candle, or you can use the last up or down close candle, series of up or down close candle, which is like this. This is a series of down close candle. If you have a series of if you use the series of down or up close candle, your range is going to be bigger, but means you will have a higher probability of price retracing into that area. But if you use the last candle that swept liquidity instead of the series of candles, you have a smaller range, and price might not retrace into your order block because your range is smaller. You get it, man. But I'm gonna give you another example. Alright, high right here, swept this high. By the way, these are cherry-picked examples, so please do not use them on every sweep of liquidity. Have designated time to trade. I'll get into that next time, so just be patient, man. You're really close, man. But anyways, we swept this high right here. We broke structure right here. Where's your series of up close candles? Right here. We pushed in to this order block. We got this rejection out of it. I'm shorting this shit every day, man. Boom, first TP, 2.2. Easily, bro. Easily. It's not as easy as it seems, by the way, so calm the hell down. If you don't know what you're doing, just don't do it, man. Alexander Rama Queen. Yeah. Anyways, swap liquidity right here. This is a high up and down candle. Swap liquidity right here. Break structure right here. Down and up candle. The series of up close candles that swap the liquidity right here. Boom, rejection, boom, bing, bam, boom. Obviously got stopped out, but you get the gist, man. No one's asking you to enter on every order block rejection, man. You gotta pick your entries, bro. You gotta minimize them in order to make this long ass candle. In order to have a higher probability trade, we want to be taking high quality trades and not high quantity trades. That's how you lose all your money, man. But this one's a really good example, though. The timing, I wouldn't trade on this timing, but it's a good example. Alright, now you have your examples. You're ready, man. Swap some high, break of structure. Anyways, I just want to point it out that this works like a fair value gap. not all the time will price retrace into your order block. So if it doesn't, just don't take the trade, man, or use some sort of other confluences. That's why I'm giving you so many confluences, bro. If price doesn't retrace to your order block, just don't use it. Like right here, sweep this low, break structure, series of the last down close candle that swept liquidity was here. Price didn't retrace into your fair value gap. I mean, into your order block. So just simply don't use the order block if it doesn't retrace. If price has already made its move, if you're still waiting for it to retrace, you've gone mad, bro. You've really gone mad, bro. Oh shit, man. Shit, bruh. Shit, bruh. Alright. Okay, we've done what it is. We've done why it matters. We've done a visual walkthrough and how to identify it. Now, mistakes to avoid. Don't blindly place a trade or blindly place orders at an order block without confirmation. You have to make sure that it's a valid order block by first it has to sweep liquidity. Not just any liquidity, bro. Wait, not just any liquidity though. It has to be valid liquidity. We'll get into that next time, which will be your key areas. And after there's a liquidity sweep, look for a break of structure. After the break of structure, mark the series of up or down close candle that swept liquidity, and that will be your order block. And the last and most important thing, when price do retrace into your order block, make sure you get a rejection or some sort of confirmation that price wants to go where you want it to go or where you expect it to go. So let's say we do have an order block. This is just a bad example, but please do not use it. Let's say this is an order block. Look, we pushed really deep into the order block. If we don't get immediate rejection out of the order block, I'm fine with taking a trade when we have a good bullish closure out of the order block. Because that tells me, look, we still, orders are being filled here. We got a huge amount of buyers. Obviously it didn't play out because this is just a random trade, bro. Like, damn, bro. Just chill. Anyways, we get bullish closure out of it, of a bullish order block. I'm taking the trade. Obviously, it has to have context. This doesn't have any context, so obviously it won't play out. Oh, sorry man, I blacked out. Anyways, please make sure to have your confirmations like a rejection candle. Hold up. Where was the example just now, man? Alright. Like, this one is really a good example, man. Like, this is honestly the best example I can find. It's the same one we used just now. Got the sweep here. The break right here. Chill, man. Order block right here. Like, look, you know it's a rejection. When price went in, it taps your order block, fills your order block. you get a strong rejection out of it. It closed above here, but if you're not comfortable with that, you can also use this candle. We retraced into the order block, means it's failed. Next, we got bullish, a bullish close out of that. You can still enter right here. The difference, it's not that much. It's between here and here. It could be a lot to some people, but honestly, if you're having this confirmation, it's likely gonna play out. I mean, I can't confirm that with you, but it's likely going to play out. Once again, I'm not God, I'm not a financial advisor. I'm just a guy who doesn't know anything, man. But this is the type of confirmation you need. This one is fine too. This ain't fine, man. Let's say there wasn't this candle right here. If the candle that filled your order block looks like this, I'ma wait. If the next candle comes out like that, I'ma enter. Because this is bullish as hell. I'm entering that shit, bro. But if it comes out like that, I'm still entering. Why? Because we had a rejection. Got it? I don't want to go so deep into this rejection thing because this is common sense, man. Like right here, they probably swept liquidity somewhere. Right here, liquidity sweep, strong rejection. These are the type of things you need to know and you should know when you are trading. But this isn't a candlestick pattern video, so I'ma stop right here, man. So order blocks done. Next up, we'll get into breaker blocks, which is just the same like order blocks, but it's their brother, man. This is a breaker block. It's more precise. Boom. Damn, bro. Long John Silver this shit. Anyways, no more spoilers, man. If you liked this video, like and subscribe. If you didn't, like and subscribe. Please always remember you can leave a comment. I'll definitely reply every single one of you. If you want, you can follow my TikTok. I'll leave a link in the description. Anyways, here. That is all, man. That is all for order blocks. Please do remember to practice on your own. Find order blocks on your own. 3 bearish order blocks and 3 bullish order blocks. Look for liquidity sweeps, a break of structure, the series of up or down close candle that swept liquidity. That's your order block. Look for rejections. That's your confirmation. Alright, I gotta make like 2 more videos after this, so if you don't mind me, I'm gonna go now. Remember to subscribe. Bye bye. See you.